Now turn our attention to India's auto component space and to try and take stock of a few things. For starters, has the recent GST cut translated into lower costs, improved margins for the suppliers, or has the benefit been absorbed into the value chain? Secondly, festivities are on in full swing. But how strong is the pickup in orders? What's the inventory movement looking like? And finally, the rare earth magnet squeeze. It's a key concern for EVs and electronic components makers as sourcing challenges persist and costs are likely to stay elevated. Put all this in perspective and take stock of things with Sunil Chordia, Chairman Managing Director at Rajratan Global Wire, and Swastid Shrikant, Badve, promoter of Belrise Industries. Gentlemen, thank you very much for joining in. If I could get both your views, and let me start with you, Mr. Chordia. The recent GST cuts, what has been the tangible impact in terms of order inflows that you've seen? And, what is the order book now looking like? Can you put a number to it?
For our company, because we are suppliers to tire industry and we are tier 3 suppliers, so the effect of all this boom in the auto industry and increased sales of auto, what we are seeing in this festive season, the impact of that will come little later on the tire industry, because 70% of the tires go in for replacement market and only 30% go in the original equipment. So, but definitely long-term perspective for tire industry is also looking positive, because there is a reduction of GST on tire itself. From 28%, government has reduced the tire GST on tires to 18%, and similarly on farm tires it is reduced to 5%, which was previously 18%. So we are bullish, we are positive that our customers, which is tire industry, will make more and more tires and sell more tires in India.
Mr. Badve, same question to you. Have you seen increased orders from your OEM clients, or will the benefit translate with a lag?
So I think there's been good growth across all segments, I think led by two-wheelers and four-wheelers. That was our hypothesis going into this festive season, that two-wheelers and four-wheelers would be the large gainers out of this GST rate cut. And I think a couple of factors that have come together. One is, of course, the pent-up demand up to 22nd September, where a lot of stockpiling was happening and consumers were waiting for the GST rate cut to happen. Second was the festive season itself that is kind of coming through. And third is the GST rate cut. So kind of three factors that are coming together to give this upward swing in volumes in the past couple of weeks in the festive season. And fingers crossed that it goes on in the next couple of months.
All right. Hi, Mr. Chordia and Swastid. Good to have both of you all on the show. Swastid, I wanted to ask you about the rare earth shortage. Has it impacted your business at all? One of your clients is Bajaj Auto. And I recall in August, they had mentioned that there was some kind of difficulty in terms of production. Has it impacted your business, or is it par for the course and things have moved on since then?
While we can't comment on any particular OEMs in general, I think in general, the automotive two-wheel industry has been dealing with the rare earth magnet issue. We do feel that there's been a bit of innovation coming in from the OEMs with the development of new ferrite-assisted motors, which are magnetless motors. So I feel that could be one way in which OEMs can solve the issue in terms of scaling production while not being dependent on this rare earth magnet issue. I think apart from that, we're still bullish that the Indian government over time will, take the right steps in figuring out this issue and make sure that the Indian industry in that sense is Atmanirbhar.
Okay. All right. Mr. Chordia, coming across to you then. You're sounding quite optimistic with regard to prospects. I think when we spoke the last time around, you all were talking about volume growth of close to around 15%, mid-teens if I remember correctly, with margins in that vicinity of around 13 to around 15%. You hold on to that?
Yeah, we are in the silent period, so I would, avoid commenting on this. But we are looking at a growth of tire industry at 6 to 8% this year. Okay. And we'll have a major share of that pie.
Got it. Yeah, I mean, noted that you're in silent period, but what about exports? Because you have a fair bit of exposure to the international markets. Could you tell us, how are things shaping up on that front? Because a couple of quarters ago, there was some difficulty, but you were optimistic that things will gradually start settling itself. Has that taken place?
Yeah, so export is picking up well, and we are on track with our projections on export. Thanks to, there is no change in the reciprocal duty on our product. We fall under Section 232, so the export to US is still going strong, and we are keeping our fingers crossed that there is no new announcement which adversely affects us.
Okay, all right. Swastid, your business, in fact, there's a lot of optimism with regard to the way ahead. And I think one shareholder wish list was that you have an unlisted business, which gradually will start getting folded into the listed business. I think that was supposed to take place at book value. Is there progress on that front? And should we expect something in this fiscal year itself?
Yes. So as we've spoken in the last two earnings calls, we do expect this merging or acquisition between the unlisted and listed entities should happen within this fiscal year, and we don't see any reason why that should not happen. So we are seeing internal progress, but nothing in particular that we can comment on publicly at this moment. But yes, we do feel that in this fiscal year itself, we'll be able to see this happening.
All right, got that. And also four-wheelers, it's a smaller percentage of your mix. Give us a quick guidance out there just to recap. What is the kit value, first of all? What is the contribution from four-wheelers? And how do you see both of them moving up? Contribution to the overall business and kit value as well.
Right. So right now, contribution to the manufacturing business is around 12%. As we had guided earlier, we expect this value in INR crores to double in the next 2 to 2.5 years. So we are still guiding for the same number, which is doubling in the next 2 to 2.5 years. Today, our kit value is close to 45,000 rupees in four-wheelers and commercial vehicles. We've just won a new order last quarter from a large commercial vehicle OEM for one of their larger chassis parts. With that, our content per vehicle is going up from around 45,000 to around 57,000. So it seems like we're doing the right things in terms of making sure that our content per vehicle is going up in commercial vehicles as well as passenger vehicles. And the good thing is that our growth today in four-wheelers and commercial vehicles is quite broad-based. So we have orders from 7 passenger vehicle OEMs and 5 commercial vehicle OEMs. So we are hedged across the industry. And irrespective of how OEMs do within themselves in terms of their rankings, we'll continue to grow given that we have exposure to more than 12, 13 OEMs in both spaces.
Okay, all right, Swastid, as well as Mr. Chordia, we appreciate you joining in and giving us all those details. As you all mentioned, we're in a bit of a silent period, but both of you all are optimistic on prospects of your individual businesses as well. Post your results, we'll re-invite you all and in fact get a sense with regard to how things are panning out.